Alright guys, welcome back to the Nasdaq Daily and your daily technical analysis for the next trading session. I hope you guys are having a fantastic Sunday today. And now let's get back to the charts. As usual, we're going to start with our previous analysis that I recorded on April 20th, about 4 days ago. And this was one of the things I was expecting to happen, and I'm gonna leave the link to that video in the description box below so you can go and check it out. You're going to see that I was ready to trade a few different scenarios, but one of them was to actually see a potential breakout of this bearish channel and to see some kind of continuation to the upper side. Now let's check out what happened. So these were our areas of interest here, and the first thing I want to tell you guys is that with time, as you can see, time changes a lot of things, and especially when you're trading inside of a channel. And usually, one of the most important things that we notice when we trade inside of channels is that the most obvious sign of reversal is when we do not touch the bottom or the upper trend line, which means that in a downtrend, when we do not touch the bottom trend line, as we were expecting to see somewhere in this area, this means that bears are losing momentum and probably we're going to continue to the upper side. And this is exactly what happened. We kind of tried to get out of the channel. We came and we pulled back, kind of do a retest, and then we shoot straight up. This was the first level of interest for shorting, but as you can see, this failed. And what happened after was, let me just grab my tool. We kind of created a new range for the rest of the week. So this is Friday session, Thursday and Wednesday. And I want to show you something very interesting. First thing you're probably noticing here is that we created the range at between exactly two of my levels. This was one of them, and this level right here is the other one. In the middle, we respected this level before when we were in this downtrend, but sometimes price just goes straight to the next level because they are just 100 points in between these levels, and price usually moves more than 100 points in a day. So that is why I usually try to have them 200 points away from each other if we expect that big of a volatility. But this week, pretty much nothing happened. Like when we trade in a range, that is when most traders fail because they always expect price to continue to the upper to the downside. And when ranges come, these are actually my favorite places to trade because once you establish a range, and that is why I always tell you guys, once we have this first leg and then a pullback straight back down to support, this is the best opportunity because you just need to find some kind of an entry either from the downside or from the upper side of the range and trade it down to the upper or to the downside of the range. That's pretty much the most basic concept there is. And that is why for tomorrow, we're going to be looking for some kind of continuation. And I think that there is just probability that we stay in this range probably for one more day until we continue higher or lower. So now, if you guys have any shorts, my first level of interest for taking profits on the shorts will be bottom of the range or our 13,750 level. So I'm gonna leave this here for now, and let's see what do we have after. It's very hard to predict where price will go if we go out of the range, but I'm gonna show you something here. And usually what happens is we tend to go down the exact amount of this range, and it's called the range extension. So if we go to the downside from here, you can expect to see drop straight down to 13,550, and same thing goes if we go to the upper side from here. But I'm gonna do this. I'm going to mark these two levels here, and I'm gonna give you the reason right now. The reason is that if we do continue to push higher, this is an established resistance right now. This is our all-time high. So always try to take some profits off at the all-time high level, even if we're just 100 points away, 150 points. That's still pretty good. And one of the things that you can see here is some kind of a small pullback, maybe to this level right here, and then a continuation. This is quite possible if we do not stay in the range. You can expect to see some kind of a new trend formation and then continuation to the upper side. Now, this is just one of the scenarios to watch out for, because this is how we're going to break out of the range. At some point, we're just not going to hit either the bottom of the range or the top of the range, and we're going to continue either push to the upper side or to the downside. But we're still in favor of the bulls, and we're now just trying to find out our way to the all-time high and above. So these two levels look to take profits if you enter longs, and these two levels look to take profits on your shorts if you are short at the moment. I'm personally not. You know that I'm usually net long, and I just play some intra-week trades to hedge when I find it suitable. But for now, I'm just going to be waiting to see if we're going to find support here and continue higher, or some kind of a small pullback and continuation higher. This is what I'm expecting. So this is my plan for Monday. I want to see a small pullback and a continuation out of the range, which should take us straight up to 14,150. As usual, guys, if you have any questions, please leave them in the comment section below. I'll be happy to answer them as soon as possible. And for now, that is it. Thank you for watching. If you like the video, please hit the thumbs up. And if you want to see more, hit the subscribe button with the bell. I really appreciate it. And that will help me push the content to more people and help them with their trading. Because as you can see, my analysis are very simple. I don't use any indicators. I just use pure price action, because this is what creates the indicators. A lot of people don't realize is that these candles right here, indicators just have their own way of creating some kind of information, and it's all based on the candles. Like, there is no other information they're getting, because this is just price. That is why I don't think you need them. And if you're a new trader, and if they help you kind of like see when trend is reversing, or when you can expect to see some kind of a support level, it's okay to use them. But with time, you should be able to just see where, let's say, the moving averages are right now on the chart without even having them on the chart. Hope that makes sense. Thanks for watching, guys. I'll see you in the next video.